question is sort of where do you start? Because I think the easiest route for a lot of investors would be do it through Indian mutual funds, because you don't have to do currency conversion, etc. You park your money in rupees and they do the rest for you, right? That's pretty much how it works.
I think that's a pretty efficient way of doing it. There are some caps now that the regulators have imposed both on the ETF side and on the mutual fund side. But that's the logical way of starting out. But now I think GIFT City is going to become a more relevant jurisdiction through which you can basically remit money using LRS. Of course, foreign banks have been around for many years in India. Their offshore branches are able to offer products. And then there are funds which are basically allowing Indians to invest in these funds. And the underlying funds are then invested in global markets.
So I think we have to cover a lot of ground, and we need to understand each of these avenues in a little more detail so that investors can sort of take their own decisions with respect to what route suits them best. You mentioned GIFT City. Just tell us a little more about it, because if my memory serves me right, even the stock exchanges, I mean, NSE itself was trying to set up these connects that would allow Indians, resident Indians, to invest via the GIFT route. But is it operational? How's it supposed to be?
No, I think historically the only avenue available was to go through a jurisdiction like Singapore or maybe Dubai and basically set up a fund structure there. But I think now the government has realized that both from an inbound and outbound perspective, GIFT City can be a very viable alternative. So I think there are already funds being set up, and you can essentially route your money through GIFT City and basically under the LRS provision invest outside of India. And I think in the years ahead, my own view is that will become a most sought after and very relevant jurisdiction to basically set up both incoming as well as outgoing funds and allow investments across India as well as offshore.
Okay, so maybe the future is going to be in GIFT, but we're in the present right now, so we need to see what options we can work with over here. And we have lots of questions coming in, so let me straight away get to it. Our first query on the show, and it's Prashanti who is joining in. Prashanti, tell us, what's your question?
Hi, I'm Prashanti Shivalenka. I work in venture capital at Cactus Venture Partners here in Mumbai. And as a budding investor interested in gaining exposure to global diversified growth, especially the US tech, how can I buy international stocks of some profitable companies, say NVIDIA or even Apple as a matter of fact, whilst being here in India? Now, I'm aware that there are several avenues like ETFs, ARDs, or via brokers, etc. But which one's the most viable option?
Okay, I think she's summing up the whole reason why we're having the show. And I guess that's what it is, right? People have exposure to information, so they know that there are a lot of these, new sectors, new age businesses, which we don't have here in India yet. So let's start, analyzing route by route. Now, for mutual funds, the limit for ETFs is 1 billion. So right now, these funds can't accept more money, right? Do I have the MF route available to me at all as an investor?
I think at this moment, both the MF and the ETF route, I think the limits have been exhausted. So I don't think they may take fresh money.
Okay.
But I think to answer her question, there are local firms which basically have tie-ups with global brokerages. You can open accounts with them, and then you can essentially buy stock. Or like I said earlier, you can talk to a global bank which is operating in India, and through their offshore branches, you can open accounts in jurisdictions like Singapore. And last but not the least, you can invest in funds which basically give you exposure to the kind of stocks that Prashanti was talking about.
So if we do an analysis of these different options available, say I were to actually open an account with a global bank, and then that would be an offshore account, right?
That's right.
Then I repatriate Indian rupees from here, they get converted into dollars or whatever, euros, and then the investing takes place.
That's right.
Is that an expensive route? I mean, just purely from a cost perspective for an investor.
No, I think whatever you do, ultimately you will be investing rupees which has to be converted into dollars, and then either you send it through, like I said, GIFT City, or you do it through a rupee mutual fund, or you basically send money to, say, Singapore. So it will involve some level of conversion. But I think the important thing is that the mutual fund did not have a single investor limit. I mean, I could invest more than $250,000 because I was investing in rupees which were then eventually getting converted. If you basically do this on your own, then you come under the $250,000 cap, okay, which is the cap per financial year. So that is something you have to keep in mind. Those are the kind of broad differences, and that is why, like you said earlier, that the mutual fund route here, the fund of funds route, is far more efficient and easier for investors to access global markets. But right now there is a restriction because of overall limits.
Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.